corporations are doing well. These days, they make money selling any old crap.
I love these things. Been waiting for a long time. I mean, it's awesome.
Fidget spinners? Between 2001 and 2006, corporate profits tripled, both before and after tax. And since the recession, they're flying up again. Yet weirdly, the share of federal taxes that's from corporate tax has been dropping over time. We're talking less than 3% of GDP from corporate tax, which by OECD standards is pretty low. And this is especially odd because America has the highest corporate tax rate in the OECD. In fact, it has the third highest corporate tax rate in the world. So some businesses out there are paying a lot of corporate tax. But not that many. 70% of businesses don't pay corporate tax at all. 42% of large businesses don't pay corporate tax. Even 20% of large profit-making businesses don't pay corporate tax. But how? Well, one way is to find yourself some affiliate companies in low-tax countries and have them make a suspiciously large profit. These are some well-known tax shelters, and this is how much income you'd expect US affiliated companies to make in them. And this is how much income those companies report as being made in them. That's not a lot of tax being paid. That's how Microsoft's 177 employee facility in Puerto Rico managed to somehow make $4 billion in 2011, getting Microsoft out of $1.5 billion of tax. And overall, those kinds of tactics cost America more than $100 billion every year. Another tax avoidance strategy is for US-based multinationals like, say, Apple, to simply not bring their internationally earned profits back to America. Sure, they'll have to pay taxes on that income eventually, but that might be some time away. And those kinds of tactics have led to over $2.5 trillion in cash reserves sitting overseas untaxed. It's loopholes like that that mean the average effective tax rate for a profitable company based in America is 12.6%. What's more, 26 consistently profitable Fortune 500 companies paid no tax at all from 2008 to 2012, and GE made $33 billion of profits during that period. But somehow, not only did they pay no tax, but they received a $3 billion tax refund. And that made Bernie's bird sad.
Oh, don't go, Bernie. It's okay.
No one really likes this situation. 62% of people say it bothers them a lot that some corporations don't pay their fair share of tax. Even 47% of Republicans earning under 75 grand a year say that. But what can we do about it? In 2004, George W. Bush gave companies a corporate tax holiday, charging a corporate tax rate of 5.25% in return for companies bringing their money back into the country to create economic activity and jobs. And the result? The top 15 companies who took advantage of the tax holiday brought back $150 billion. They spent 16% extra on stock buybacks, the top 5 execs in each company received 27% more pay, and they increased employment by minus 20,931. Yes, they cut 20,000 jobs. And that made W sad.
Oh, don't go, Bushy. It's okay.
Now, economists from both parties are trying something different, reducing corporate taxes by removing loopholes. And that will hopefully reduce tax avoidance while increasing revenue. But what loopholes to remove, and what should the rate be reduced to? Well, that's for the next few months to sort out.